Well, hello everybody. Welcome to P.B.M. Money. Can you hear me now? That sound you hear crashing down around you, it is the stock market. And I did say crash, and it's not a surprise. For those of you that have been watching me for a while, I started about 6 or 8 months ago saying it's not a question of if the market's going to crash, it is a question of when, how hard, and how fast. Hello, can you hear me now? All right. Well, as I've said all along, I do not watch the market. I watch my stocks. And I made that video probably 6 or 8 months ago, and I told you at the time that I would slowly move my money out of the market and into savings to protect it. I wanted to keep some there in case there was a run, but I wanted to protect the majority of it because of a purchase I plan on making. I didn't want to lose it all in the market. And I did. So the majority of my money is covered. I've probably got, I'd say maybe 20% exposed in stocks and a mutual fund. The rest of it is in cash, which is fine. Now, the market gave some very, very telling signs, and I have documented this all the way through. As an example, I came on a month or two ago and I said, my stocks have been trading sideways for the last 3 months. And if you're buying growth stocks and they're going sideways, you're doing it wrong. So, just when this started, just before the crash actually started happening, there was a stock that I had started a position in called the Honest Company. And then there was 2 or 3 stocks, other stocks that I had that were supposed to be growth, and they had gotten pretty much to where I thought they would. So I sold those and I bought the Honest Company, and now I have a good position in the Honest Company, and it's in the toilet. And if I had more money, I'd go buy more stock in it because that is a household company. And no matter what the market does, no matter what anything else does, people are still going to need diapers and wipes and all that stuff. So, decent choice in my opinion. We'll see. Time will tell. But I went over and checked some numbers today, and I want to run you through just in case for posterity, so that if this ever happens again, you'll be able to recognize it. Now, 3 months ago, my stock portfolio on Robinhood went down 6.48%. Not a big deal, enough to call it a correction, enough to get my attention. A month ago, it went down 9.31%. Okay, that's 17%. In the last week, it's gone down 5.47%. Dang. So then I went to the all-time chart on Robinhood, and from November 12th to December 6th, my account has gone down 16.54%. Now, a lot of the guys all the way up to today are saying that it's a tax loss harvesting thing. Okay, I've been around the market off and on most of my life, and there is tax loss harvesting going on, but as a general rule, it's limited to the market to 2 to maybe 4 or 5%. It goes down, and then it comes back in January. This ain't that. And I saw a guy named Jeremy Lefebvre on a show called Financial Education, and he described what's going on here perfectly. He said if you look at the S&P 500, the market doesn't look that bad. He said, but if you start looking at individual stocks, you can see very easily what's going on. Yes, the institutional money and the large investors are tax loss harvesting. That's true, but they're not pulling their money out with the hopes of buying in again in January. That's not what they're doing. They're taking their money and putting it in high-tech stocks like Google and Apple and Tesla and those companies, because those are safe companies. Those companies are actually going up right now. But if you look at individual stocks, and I don't mean just, off-the-wall stocks. I mean, as a general rule, especially the small and mid-cap stocks, they're crashing. And he's used the word crash before I did. The market is crashing right now. Now, the question is, how long is it going to go? And my guess is at least through December. I think it's gone too long, too far, too fast to turn around that quick. I think the pain is going to continue till at least the end of the year, and depending on the policies that the Biden administration takes, it might go longer. History says that when a market crash happens, and they do happen periodically, they last an average of 89 days. Which means this one started at the end of November. So that means this could theoretically go till mid to end November. February. That's a lot of pain. Now, how long will it take to come back? Who knows? If the fundamentals are sound, which they seem to be, it should come back pretty quick. And right now is an opportunity. If you have money, right now is an opportunity to go in and buy some deals. I just happened to get lucky when I did the Honest Company, because I sold those 2 or 3 stocks out right about at the peak of when they were done. And I bought the Honest Company because I feel like there was a lot of, they dropped like $2.50 or 60 cents a share, and it's only, at the time it was only a $10 stock. So it went down 25%, and that's when I bought. And I took my cost basis down from $10.80, and right now it's like $9.03. So time will tell. I mean, nothing's guaranteed, but it looks like I made, luckily, a good choice at that point. So the question is, now what do we do? What's the smart move to do if you're in the market? Well, if you watch individual stocks, and let's say that you have a stock that is down 25%, and you've got money, now's a good time to go buy. And I wouldn't dump it all in there, but I'd start building that position, because if it's down 25%, you can get your cost basis down pretty darn quick. And then if you see that it's going to start to go up, buy a little bit more. And if it goes down further, buy a little bit more. And I would just keep nibbling and trying to get that cost basis down and start buying on the way down. Don't try to do like everybody else does and buy on the way up. Don't buy all at once, but buy little bits on the way down. That way, when the stock does turn around, you will already have spent the money and your cost basis will be down. That's what I would do if I had money. I do not have that kind of money to put at risk, and I don't have 20 years to wait. So what I've done is exactly what I told you I would do. I've got the majority of my money sitting in cash, because we're going to go invest in real estate in the next 6 months probably. So we're set to go. I've got the money for the real estate. I've got the money sitting there. I've still got about, 20% sitting in the market between individual stocks and a mutual fund. And I'm just going to let it sit. I'm not going to add any more. I'm not going to subtract any more. I am going to keep a watch on the Honest Company. And if I see that it takes another big jump down, then I will transfer some money and buy some more of that on the way down. But in the meantime, I'm just going to hold tight. I'm not going to do anything. I'm just going to let the market play out, see what happens. I see two possibilities. Just two. That's all I see. Number one, beginning or mid-January comes and the market bottoms out and starts to go back up, which means a combination of things have happened. It was a lot of tax loss harvesting, and it was a correction, and the big boys are back playing. Or I see the market on a steady decline for the next couple of months, in which case the big tech companies should be doing just fine. And I'll tell you a fair weather sign to watch. If the stocks like Facebook and Google and Tesla and YouTube, if those stocks start to go down more than just a couple of percentage points, you better batten down the hatches, because that means institutional money is pulling money out of there, and now those stocks are going to suffer. That's going to send a signal to the market that, hey, this is a lot deeper than we thought it was. I think right now it's a combination of things happening: tax loss harvesting, people rearranging, people running out of money, people pulling money out, getting ready for the holidays, people buying other investments than stocks. I think it's just a combination of a lot of things happening, but it dropped too quick, too far, too fast. I mean 16% in less than 30 days in my portfolio. That's a lot, because most of the stocks that I have are growth stocks. And they're not all small caps, they are growth stocks with dividends. And they dropped 16.5% in less than 30 days. That's a lot. And just to give you an indication, as of November 12th in my Robinhood account, year to date we had done 44.79% growth. So we were doing pretty good. So we had some good growth stocks. Even when everybody else was slowing down, we were still at almost 45%. Less than 30 days later, that has dropped all the way down. For year to date, we're now at 28.25%. That's a big drop, especially when you take that happened in less than 30 days, and those numbers are for the entire year. Dang. Well, it went too far, too fast, too deep for this to be tax loss harvesting. And I don't care what anybody else says. My hunch is it'll begin to bottom out mid to end January, and then it'll go flat for a while. It'll drop a little bit more, and then I think it'll turn around probably in March. That's just my guess. Simply, I know nothing more than just history and what the market's been doing. And I will tell you this, and I'm going to remember this. The market was giving all kinds of hints that this was coming for the last 3 months, because I had purposely bought growth stocks and they were trading sideways for 3 months in an economy that was supposed to be doing very well. So that was a big red warning flag, and I did move some money. The second month that happened, I made another move, and I moved some cash from my stock mutual fund into my savings account, just to protect it, because I thought it was coming. I don't claim to be smarter than the average guy, but I did say this 6 or 8 months ago. I reiterated it a couple of months ago, and now all I have to say is, can you hear me now? Have a great day, a great week, and happy investing.